Macro bears around the world are in awe of how stock markets are coming towards new all-time highs, breaking out of resistance zones, putting pressure on more bearish short setups. How is this possible? Today, let's have a look at some of the patterns that have played out in Bitcoin already and how this applies to the stock markets. Now, we need to understand both aspects here, Bitcoin and crypto, of course, the stock markets and the economy, because without the stock markets and the economy, Bitcoin would be flat on its ass. Before we get into this, smash up that like and subscribe to the channel if you haven't already. Those links in the top of the video description give you a discount for our TIA Premium membership, which is going up in price very, very soon. So if you're interested, get on board with that and join our members who are making significant gains in their crypto trading, as we've just seen over the last couple of days. Huge 100% returns across the board using strategies that we teach in TIA Premium. All right, guys, let's start with the news. First up, GDP has come in. As you can see from some of the news articles or the different news outlets, some of them like to report it as bearish, growth slowed. Some of them like to report it as slightly more positive, the economy grew, and others just want to tell you exactly what it is, which of course is the Bureau of Economic Analysis here. So we're following this from our Forex Factory. You can see that the GDP has increased for the US. We are now up 1.1% on the quarter. The macro bears would be telling you that the world is about to collapse. The markets are about to collapse. And of course, we have been hearing this now for coming up to over 12 months, coming up to 18 months, of course. So this looks like it is getting a long way from home. There is still a lot of pressure for the market to drop because we haven't hit that final confirmation, getting above those 50% levels and that resistance level, which I'll show you on the S&P. As for the data, this comes direct from the US Bureau of Economic Analysis. So this was the GDP that was released overnight. It is up again. So that's a good sign for the economy. Yes, it's slowed from the previous quarter, but you're not going to keep pumping quarter after quarter after quarter. This is still up and it's still positive there. So this is what I posted on Twitter just this morning here, looking at the resistance levels for the SP 500. We have a key level here in August that the market still needs to get above. That's around 4,300 points. But you know that we've been talking about 4,200 for many, many, many months now, as it's been a key resistance level for the market since May, June of 2022. So we're basically coming up to 12 months within this resistance range or this trading range. But the market, of course, has been down since January of 2022. So far, this is the bear market low. Some analysts still believe that this market is going to eventually collapse. And of course, there is the possibility of that. There is no 100% guarantee in trading or investing. All there is the probabilities that we see from our own analysis. And that's what differentiates one trader to the next, from one investor to the next. And hopefully, eventually, everyone catches up and not too late. So the other thing we're seeing here is, of course, higher lows. And this is a bullish sign in the markets, especially when the lows are formed on very high volume, which we've covered before, especially this low here. This was the banking crisis low, which was extreme volume. That just means that there was a lot of activity in the market at that time. And because the market didn't roll over after that point, that typically means that there is a lot of buying activity happening at that point. So that's how we read that on the chart. So the S&P 500, this is the current pattern that we are forming. We're on a weekly bar chart here. I'll throw on a few more lines in just a moment, but you can see here, this was that March collapse low, very, very high volume, basically the same sort of volume that we saw at the previous low. And from that point, the market took off from there. We've got higher lows forming, and we just had this recent week and a half of moves down. There was several days here with the earnings coming out in the US, and we've just seen the market sort of push off from that point, another about 1.5%. So let's throw on a few lines and just make it a little bit more complicated here. We've got the rejection trap that we've had on the chart for quite some time. We've got the transitional period. We have our 50% level, so that's this line right here. And for that 50%, our level is at 4,000. Basically, all that means is that this is the move to the upside. The market is just doing a measured correction. You have to have some sort of selling after all these gains have been made by traders. They can't just buy and hold forever. They've obviously have much bigger portfolios than a lot of us retail here. And so they need to be balancing their portfolios on the way up. And this is what a measured correction looks like. These were the highs. So we've basically come back and tested those highs. This was all drawn in beforehand. You guys can see that on the videos. And that was at around 4,060. And that low came in at 4,068.75. So this isn't over yet. We still need to see the market climb above and close above the level of around 4,200 and ideally that 4,300 level. But for now, we're sticking to the 4,200. So all this means from this point is we're waiting for that close above. It can still come back down and test some of these other levels. And seeing as that we're up for 1, 2, 3, 4, 5 weeks, maybe we have another week or two left in this zone here to come back as a correction. But we're going to close above that level. This is really going to start putting even more pressure on the macro bears, the guys who are continuing with their analysis of the market collapsing from this point and basically coming back to break the March low, the December low, the October low, maybe even come back and test these highs back here in 2020, the September low there and the October low. So that's what they're particularly waiting for. Can we be wrong? Yes, I've mentioned that before. How will we be wrong? Basically a move up to these levels here, maybe a touch of these 43 levels. This would be above the 50%. So this is your macro 50% level. You want to see the market get above it and stay above there. But if we start to get some closes under these levels again, and then prolonged weakness and further closes below these levels, and then again below these levels, then we would have to start flipping to the bearishness. But I'm not getting there yet because we're nowhere near that point. We just have to be aware of what could happen. So this is going to be the next tricky part here for the bulls. But if they can overcome that, then there's not really too much left for the bears to hold on for their hopes of further collapses. They got 1 point left up here, so that's around 4,600 points. And then of course, the all-time high, which is around 4,800 points. What does this look like on the VIX? Well, typically this has been the call of the town for the last year and a half, where every time we come down to these lower levels, maybe even on the diagonal, that the market typically bounces and you get a new low put in or a significant low. That hasn't happened this time. We only saw a very, very minor bounce and we're basically back at 17. Underneath this 17 reading has shown over history to be a pretty good area for the market to push up in a bull market. So this is putting a lot of pressure on the bears again, a lot of pressure on the people who continue to hold a very bearish view of the markets, of the economy, of everything else in sight. But it's not showing up even on the NASDAQ, so the tech sector. We looked at this as being a potential low. We weren't sure at the time if this low here would hold, but once it started to break the downtrend here, this is the log downtrend, put in support above the log downtrend and then push higher, you have to start to wonder, why are the bears still there? What are they still seeing? Well, they can still be seeing there's some resistance above here at 13,600, the top here 13,700, and then of course these other levels higher. But from that point, you're basically very far from where the bottom is. 27% so far, then about 30% when we get to the 50% level. And if they wait until these next tops, that's about 45% from the low. Also on the US dollar, this thing has been holding up at the moment at around 101. Remember this, the last several weeks, there has been huge sell news on the US dollar, but the US dollar hasn't moved. Very similar to what happened in the past. This was the top, this was the huge buy news for the US dollar. And on the channel, you guys remember that we talked about this as probably being the top. Got it almost to the day. I'm not expecting to get it to the day every time, but it's mainly around the time where you go, this is the time that I should not be buying because the news is telling me that everything is really, really good for the US dollar. And it collapsed from that point. This time round, they're saying that everything is bad. Countries all around the world leaving the US dollar. You hear about a news item every single day saying that there's a new country moving off the US dollar. More exchanges around the world are happening in Chinese yuan or euro or an African currency or a Middle Eastern or whatever it is. But the US dollar has held up so far. So probably that news cycle will come to an end eventually. My overall view here is that eventually we'll get a breakdown of 100 and start to move to some lower prices. But for now, that news has been dead on wrong again. And that's all I really want to point out in this particular piece of the analysis. Moving on to the overall real estate cycle before we get to the point about Bitcoin and basically how the S&P has followed almost dead in those tracks. This is the real estate cycle, and we're in this particular zone right here as the market starts to come out of the depression era, basically the time when everyone has been extremely bearish. That was through 2020. We had that boom out in 2021, and then of course 2022 we came back down. This is put out years and years in advance, so it's not going to be accurate to the day, but it's pretty well accurate to the year or the quarter there. So this is where we're looking to go over 2024, 2025, potentially into 2026, around that time, after which then we get some mega collapses. So I just want to point this out because I'm not always mega bullish. There is going to be a collapse point, but we're not there yet, and the charts are basically showing us that we are looking like we're setting up to scream past these levels over the course of 2023 and 2024. So how is that exactly the same to what is going on with Bitcoin? Well, we've seen a very similar pattern for BTC already. So if you guys are invested in Bitcoin or cryptocurrencies, you can see these patterns of trading ranges, and potentially they're just accumulation zones. You don't know they're accumulation zones until that breakout. And so that's what we've been covering here for BTC. You can see that this was overall an accumulation zone. You had that final breakdown here, which was the best accumulation you could get. And then you see those mega breakouts to the upsides. Basically, it's the shorts getting squeezed. It's the late entrants figuring out that, shit, maybe they were on the path too late. And so they're starting to buy in. And then everyone starts to get that bit of FOMO before we get a bit of a correction. And so that's what I'm seeing here with the S&P. You can see this sort of pattern where it is potentially accumulation. I need to stay on that humble side because it hasn't been 100% confirmed yet, but there are all of the hallmarks of the lows coming in. You can see we've got significant lows, significant volume. That's way higher than anything in the past. You got significant volume again on a very, very high emotional event of the banking collapse, and the market pushed away from that point. And then even just this last week, there was First Republic Bank, which we had covered here on the channel, where that bank had gone down. But look at the move to the downside. So much less than that move, and less than this move, and less than this move. Another thing that we've also covered as well. So basically you start to see these moves wear on the psyche of the investor, maybe the smart investor, maybe you're the smart investor, and you see that the downside is getting less and less and less. This is just another hallmark of a bull market at its beginnings. And then only once everyone else, the herd, the sheep, are feeling comfortable, do all of those good news events always push the market up. But for now, they typically just don't affect the market too much. And the bearish news, remember the banking collapse stuff, then just this week we had First Republic Bank, bank run there, $100 billion, etc. The move to the downside become less. So really simple stuff that you can take away and use for yourself so that you can start to feel confident in your own analysis when you are looking at news headlines and what's going on in the market with actual buying and selling. Where are the buyers and the sellers coming into this market? So that's essentially how this has basically, well, what I think is basically following in the exact same footsteps, because it's the same sort of accumulation and mental psychology from the investors. Now, what we've seen recently over the time for BTC is a lot of pressure to the downside. I mean, I say a lot, but it's really from 31K to 27K. And it was only under the $27,000 level for a matter of seconds. It may have been a minute, but it really hasn't been under 27K for that long. Remember, we still have a lot of people waiting for $20,000 to get taken out. We still have a lot of people waiting for 15K to get taken out. These levels here, I don't think are going to get taken out now. Underneath 20K, basically this low is at 19,568. So basically under 19,500, I don't think that's going to happen. And I don't think these levels are going to happen either for BTC. And that's going to spill over into the SP 500 as well. Once, or let's say if, this breaks out and we start to get accumulation to the upside. You probably won't see this March low get taken out, which means you won't see this December low get taken out, and then you won't see this October low get taken out either during the course of this next stage of, or the last stage of the real estate cycle, where this looks like it should be heading up sometime mid this decade, before Then we get the collapse after that point. That's when everyone can get excited about further downside prices. But they won't see it or hear it because at tops, you don't often think about the downside. And that's what we will get to before we have that collapse. Right now, everyone is looking for a downside. Doesn't seem like it's happening based on what you can see buyers doing in the chart. So as the day closes for BTC, just to some shorter term timeframe stuff, this is the tweet back on the 10th of February. So coming up to 2.5 months now, looking at Bitcoin under 22K is a great buy zone. So I think that was a pretty good area. And like I pointed out before, if we happen to get anything under these levels here of 26.5, I think that's going to be a pretty reasonable buy area as well. But for now, over this closing day of Thursday, we just closed at 29,486, so basically 29,500. That puts BTC above the 50% line and above this yellow box. So this yellow box is where the trading once was before we went on this little pump to 31K, drop back in, and now we've just pushed back above it. We need a few more closing days above this level to confirm the strength for BTC. So I'm waiting to see what happens all the way through till about Monday, where we get that weekly close for us, and then Sunday for you guys in the US as well. But for now, it seems like it's on the path to be closing relatively strong here above the $29,000 50% level, above the previous top level as well. So let's wait and see on that for BTC in the short term. Overall, back to the macro, Bitcoin, it's in its transitional stage. So stop being a transphobe, as Michael has pointed out on his Twitter as well. This transitional period from a bear to a bull takes about 22 months, like we've seen in the past here. So this is the 2015 into 2016 or 17 bull market. That's the period that Bitcoin was in its trans. And then again, 2018, 19, 20, about 22 months. You got this pump to the upside, dump, pump, and away we go to the upside. We're in about that zone now. So this could be another 22-ish months. Maybe this yellow line comes up a bit higher, but around, that 1.5 to 2 years is typically what has happened in the past before we get that final pump to the upside where the late buyers come in, which is what I think is going to happen with the S&P as well. Same sort of deal with real estate, because you still have a lot of bears thinking that the interest rates are really going to affect the market. But that's for another video, which I have a lot coming up on. So stick around the channel, like and subscribe. Top of that video description are all the links that you guys need there. Sign up for a discount for TIA Premium before the price goes up. Join us with our other traders making pretty decent gains on their trades. And I'll see you guys back here at the next video. So stay tuned. Until then, have a great one. Peace out.